The broadcast is now starting. All attendees are in listen-only mode.
Okay, hello everyone, and thanks for joining me on this Thursday night for my latest webinar, which is titled Unorthodox Entries. I'm Kevin Davey of KJ Trading Systems, as you probably know. So tonight, we're going to quickly, for those of you who may not know me or some of my story, I'll go over it really quick. Then we'll get right into the meat of things with unorthodox entries and talk a bunch about that. And at the end, I have a special offer on a system that has some unorthodox entries, which I think you'll really like. And at the very end, I'll have probably about 10 or 15 minutes for questions and answers. And I am going to be recording this, and you will get a link after the webinar, probably tomorrow, which you can then join and listen to the webinar anytime you want, if you can't make it for the whole thing. Okay, so first, who am I? Well, first, I'm a full-time trader. I've been trading for over 20 years. The last 4.5 or so have been full-time. I was able to make that transition from part-time to full-time trader. But that's primarily what I do. I'm not, even though I'll be selling systems, and I sell systems on my website and do consulting, that's not my primary source of income. I'm really a trader beyond anything else. And 3 years straight, I finished in either first or second place in the World Cup of Futures Trading Championship. You've probably heard of that contest. That was the one that Larry Williams 20 or 30 years ago turned $10,000 into over $1 million in a year. So it's probably the most prestigious trading contest out there, the most popular one, and certainly there's a ton of good traders in it. So to finish first or second 3 years straight was a pretty good accomplishment. And each of those years I had over 100% return. Okay. So first, I just want to put up this disclaimer that all the results I'll show you today, you have to treat as hypothetical. Don't trade with money you can't afford to lose. And futures isn't for everybody. You have to be aware of the risks involved. Past performance, of course, is not indicative of future results. So there's some good warnings in this particular slide. Okay, well, what I hope to teach today are really 5 different things. First, why? Why should we use unorthodox entries? And then the second thing is, what are unorthodox entries? And then where can we find them? Then I'll give you some real-world examples of some of the systems that I either trade with real money or that I have kind of waiting in the wings, or what I call incubating, that have some unique and strange entries. And then I'll give you some steps for your own trading on how you can incorporate some of this. Okay, well, let's get started. So the first question is why? Why should you do something unique in your trading? Well, here's a chart of just a simple moving average crossover system, and I just use the default values that came with the indicators, and I just put it up there and let it run. And you can kind of see, it might be a little hard to see, but it takes trades whenever the moving averages cross over each other. It's either long or short. So this is a pretty standard system. Most people who fire up their trading software for the first time will do something like this, and a lot of people even trade these type of systems. But my point is, if you do what everyone else is doing, which this is a pretty common type system, what you're going to end up with are results that what most other people get. And you can see the equity curve for this just almost goes in a straight line downwards. And you get what everyone else gets, which is becoming a losing trader, where in this particular article, it said 90 of every 100 Forex traders fail. Futures is the same way. It's probably a pretty accurate number. And I think a lot of that has to do with people just doing common things. Everybody can see certain support and resistance on a chart, and everybody can calculate simple moving averages. And a lot of times the pro players know when all the beginner type or unsophisticated players, when they're going to be entering, and they just work around that. So that's why you should be using something different. You don't want to be doing the same thing as the rest of the herd. So what are unorthodox entries? The way I'm defining it is an entry which is used by few, if any, other people. So some different ways you could create one. You could take a traditional entry and do some modifications to it. That's probably pretty simple. I'll talk a little bit about that in a minute. You could come up with completely new indicators, new patterns that you see, something that you just didn't pick out of a trading book. And then the last one is outside source entries, where you take information from another source that isn't price related and use that. Like, for example, I saw a chart the other day on the stock market, and if you had taken out the performance of the day before the FOMC meetings, the stock market does a lot worse over time. So if you had that information in advance and you just programmed it in to not trade or to only trade, let's say, those particular days, well, there's your outside source of data, and that might make for a pretty unique system. Of course, now it's out there and published, and so now it's not unique, but probably at one time it was. So we'll take a look at each one of those, and I'll give you some ideas of how to do things with that. So the first one is modification of traditional entries. You could do something like use our moving average crossover system. You could use moving averages, but instead of the values being fixed, maybe make them a function of volatility. So in real volatile times, the moving average value goes down, and less volatile times it goes up, or vice versa. Could do all sorts of things. The key would be to have it change over time. Then if you look at like an RSI type system, instead of using the 30-70 or 80-20 numbers everyone else uses, you might want to do something unique with that, and you could do something that changes with time, or with price, or with volatility, or with time in a trend. There's no limit to the ways you can do it. And the point again is you want to take these traditional indicators and these standard things that people use and turn them into something that doesn't seem like everyone's using it, something unique. And if you can do that, I think you're going to be better off, because you're not going to be doing the same thing everyone else is doing. Hopefully my voice is coming through okay. If you can hear me okay, just type a quick yes or a quick Y in the box, just so I can see. Okay. I just wanted to make sure. Sometimes I just get wrapped up in the talking, and it might turn out no one can hear me. That wouldn't be good. Okay, so let's look at our second bit of unorthodox entries. This one would be totally new indicators or patterns. So, if you have the software, you could pretty easily create your own indicator, whether or not it's great or not. That might take you a little while, but you could certainly do whatever you want with price, with volume. There's no limit to how simple or complicated an indicator you can come up with. I always think simpler is better, but the point is, again, create something of your own design, something that you think works, and you can use that just by looking at the market. Another way is to just find a candlestick pattern or a chart pattern that you've never heard about before. So I'm going to talk about one a little bit later. I'm not going to reveal the actual pattern, but I actually am starting to trade a Forex system pretty soon live that was just based on one of the entries is based on a simple one-bar chart pattern that I saw, kind of like a candlestick pattern, where I said, wow, it looks like when this happens, the market does this. And I looked at it enough times to convince, and enough time frames to convince myself that might actually make a decent entry, with some other things, but that just kind of came to me. And so, and I think it's pretty unique. I don't think anyone else I've never seen this mentioned before. So, again, it's doing something unique. The outside source entries, you could do this is really where the sky's the limit. You can do just about anything. There's people out there that use tide charts, use phases of the moon. The theory there is that humans are influenced by the moon and gravitational pulls, and that kind of thing. Does it work? I don't know. The one system I'll be offering later, I actually took days that Congress is in session and use that to help generate signals on the mini S&P, because there's a definite correlation between Congress being in session or not and the stock market going up or down. So that one's pretty unique, although it's becoming a little bit better known, but then I put some twists on it that I don't think anyone else is doing. But this one, the problem with this kind of entry is it takes a lot of extra effort, and you have to set it up with your trading software to go, and you got to enter the data every day, or you've got to have a data source automatically kind of piped in. So it's not as simple as just pulling up a chart and throwing a strategy on it. You've got to do a little extra work. And part of that makes it unorthodox, because most people will not bother with something like that. They think it's too much trouble. Apparently they just want something simple that they don't have to think about, where sometimes doing a little work, doing that little extra work is what makes the difference. And you do things that most people don't know about or that can be done. So, what you're looking for here are any kind of correlations or interactions. Way back when, people used to use bond data to help predict the stock market. So, that's probably the oldest one, at least that I remember seeing. And I'm not sure if it works that good anymore, but again, it's just something a little unorthodox. Okay, so where can you actually find these type of things? They can really come from anywhere, and don't dismiss anything as being just wacky, because sometimes the stranger it is, the better it is. Of course, you've got trading books and magazines. I wouldn't use those as your baseline material, but I've certainly done it where I've taken books and magazines and then put my own ideas to it and come up with something unique. Coding mistakes. This is a kind of funny one, because I've done it, and I'm sure anyone who's created enough trading systems has done it, where they think they're doing one thing and they end up doing something completely different, yet their mistake actually works better. So, don't think about coding mistakes as always being bad. Sometimes they can actually lead to better things. If you have a greater than symbol and change it to a less than by mistake, that might lead to something good. Conversations with other traders, just spending time talking to other traders sometimes leads you down paths that are fruitful, and I'll show an example of that a little later. Dreams. If you think enough about trading, eventually you're going to have dreams of trading, and I don't know if you're like me, but every once in a while I'll have a dream where I'm sitting in front of my screen and I'm watching something happen, and it's like a winning trade or something, and sometimes I'll remember what that entry was, and I'll actually then the next day try to like program it or something. So that could do it. Your intuition, sometimes you just have a feeling of something, and if you do it enough, you might be able to quantify that. And that's certainly a way to get unorthodox entries. And then there's these ideas out of the blue, which could be, excuse me, could be from your own personal experiences, or maybe if you're in the science field, it could be something in your field of interest that would apply to trading. There's all sorts of ideas out there that are just floating around that can be applied to trading. And I'll show you one in a little bit. And the key is you just keep your mind open to any possibilities. And the way I look at it, because a lot of people will email me and say, hey, what do you think of this or this? Or, I'm thinking of something really strange. And my answer always is, I have no idea, but I'm not going to say it's bad until you test it. Chances are most ideas turn out to be bad, and they're hard to make a system out of, but that doesn't make the idea itself bad until you test it. So you just keep your mind open to any possibilities, and what you'll find is you get a lot more creative and things just kind of come to you. So here's some examples, and I won't get into super specific information, but what I will do is I'll tell you the general description of some of these things I use, how I got the idea, which may be the most important part, and then the general performance of it as part of a trading system. Of course, all the numbers I'm going to show you have to treat as hypothetical. I just wanted to bring that up again. And there's going to be two parts to this. One is systems that I'm actually using to trade real money, and also systems that I have incubating, which is awaiting trading real money. And for one reason or another, I'm not trading them currently, but I hope to at some point. Okay, so first let's look at ones I'm currently trading with my own money. And some of these you probably will recognize because I've talked about these systems before, and some you won't. Okay, so the first one, I'll start with how I got the idea. It was a few years ago listening to, there used to be radio commercials a lot more in the summertime, and a guy would come on and say, hey, now's the time to buy heating oil in preparation for winter. No one else has thought of this, so you should do it now, and when the prices go up in winter, you'll make a ton of money. Okay, so I thought about that and immediately thought probably the best thing to do is do the opposite of whatever that radio guy said, because if he's telling the masses that that's a good idea, chances are it's not. But it kind of got me thinking of, well, what if I would take one of the physical commodities like heating oil or corn or wheat or hogs or orange juice, and on a certain month, let's say January, I'd buy, and then 6 months later I would sell, and then put some price targets in between, so you're not necessarily holding that whole time. But the idea is one time of the year you're going to be going long, and 6 months later you're going to be going short. And so I kind of went with that idea. I thought it was strange enough. I picked the second trading day of the month to do this, and that was purely because at the time with Tradestation, which is what I used to test it, I didn't know how to easily program it to buy on the open of the first day of the month. So again, that's almost like a coding mistake, where it was just my ignorance just led me to just create this and pick a certain day. I could have picked any day. And so what I did was I actually picked 7 different commodities. So each one makes 2 trades a year, so it's 14 trades a year total with this particular system. And again, it just came from that radio commercial. and then I tested it and kind of refined it. And here's what the performance looks like over, it looks like since 2004 when I was doing a walk forward analysis, and then I started real-time trading this about 3 years ago. And you can see that's in the pink line. And that's no position sizing applied. It's just a baseline. It's usually one contract per trade. A couple trades or two, and they just start out that way. Pretty simple system, but it works, and it's also pretty unorthodox. There's probably very few people who would just say buy or sell on this particular day with no other confirmation. So I'm not using anything here like, well, I'm only going to buy if the 10-day trend is up and do this. It's no, you buy January 3rd, the second trading day of January or July or whatever month it is, and every commodity is a different month, a pair of months, and I just went with it. So I would consider that a pretty unorthodox type system. Okay, here's example 2 is a spread trading system that, in talking with another trader, I kind of developed this. And the problem I was having with this for a while was when you look at all the possible spreads. Now, a spread trade would be you buy December corn and you sell July corn, and you put them on at the same time. And what you're hoping is that the relative price between those two goes in your favor. So when you think of all the different combinations you can do, it turns out there's about 30,000 combinations at least 30,000 ones I'm looking at, and I'm looking at only about 15 different markets. So what I had to do here was, how do I evaluate this? How do I come up with an entry to do this type of system? And so what I ended up settling on was something that I think is pretty unorthodox, and I'm using weekly prices and an algorithm that goes through and ranks 30,000 different spreads each week, and then I do some confirmation off of daily bars. And again, it's something that I don't think anyone else is really doing out there. And I think that's part of the appeal, or the part of the profitability of it, definitely part of the appeal of it to me. So here's how it's done. I've only been doing this one live since June. I was testing it for a while. And you can see it's done pretty good. It's a little too volatile, and I have to work on that a little bit. But what was happening in July was that's when soybeans were going crazy with all this drought in the U.S. Type stuff, and so it was spiking up and spiking down, and it was getting pretty crazy. But you can kind of see so far so good with this particular entry. Okay, the third one is my trender system, which I offer on my website. This one is based on game theory, if you're familiar with game theory at all. And it's based on what's called a tit-for-tat game. I mean, basically that game is, if you push me, I'm going to push you back, but if you're nice to me, I'm going to be nice to you back. That's the game, and it's a pretty standard game that people look at in game theory. And that's how I got the idea. I was reading a book on game theory, and I just applied that particular game to trading and to an entry specifically. So it's a pretty simple entry, but as you can see, it's worked. I've been trading this one live for about 3 years now, and compared to its walk forward testing, it's pretty much doing about the same thing as far as performance goes. And it trades the euro and gold, and it's worked out pretty well. And this is all one contract performance. So the website, the link for it is down at the bottom. In case you're interested, you can always just go to my website, kjtradingsystems.com, and click on Systems up at the top, and you can go see it. But this is a good example of something that is remarkably simple, and yet I think it's still a little bit unorthodox, and it works. So the fourth example I want to give is just an example of my SFE system. This is another system I offer. This is just one of the 5 strategies in it, and this is the crude oil strategy. Now, obviously, most people, when they're looking at trading a market, if they're looking at trading crude oil, they'll put some indicators or patterns on crude oil. That's the standard way to do it. What I did here was I took what's called the crack spread, and the crack spread takes the price. It's a mathematical relationship between crude oil, heating oil, and unleaded gas, and it creates its own signal, or its own, I guess, data stream over time. And what I do is I'm basing my entry and exit signals on crude oil off of some manipulation of that crack spread. So again, it's something probably most of these, I can almost guarantee most day traders and people trading crude are not using the complete crack spread and manipulating it the way I am to get signals. And again, the proof is in the pudding, as they say, and here's what the performance of this crude oil system has done over the past, since like 2008. You can see in 2008, around the financial crisis, it had a big drawdown. So that was certainly hard to take. But then probably since mid-2010, it's been on a pretty much upward trend. So it's done really well since that point. And again, it's kind of unorthodox. It's something different, and it's not something I can imagine most other people doing. So the last example I want to give is what I'm just calling my Forex patterns. And this one's, I'm actually going to try trading a discretionary system that's just based on 2 chart patterns. And the interesting thing about it is one of the chart patterns is just out of a book. It's called Forex Price Action Scalping by Bob Volman. But I kind of took it and did some things to it where instead of it always being just a signal to a certain signal the way he lays it out, I can actually have the reverse signal depending on some factors. So that kind of makes it unorthodox. It's something that goes against what most people think. And the same with the other pattern. The other pattern is just a simple, I'd mentioned it before, a 1-bar candle type pattern that always seems to, or a lot of times seems to bring on a certain price behavior afterwards. And so, and that one too can go long or short. So again, it's something a little bit unorthodox. I got the idea obviously from that book, and just I think I put down a lot of hard work just because I don't think you come up with these things over time, right away necessarily. Sometimes it takes a long time of just looking at patterns, looking at charts, before something just jumps out at you and you say, wow, why didn't I ever see that before? That was truly what happened with me with this one particular bar. And the funny thing was, once I saw it, I started looking at it on other various instruments, various time frames, and I always saw it where I'd never had seen it before. And I thought, wow, that's strange. But that might be just a reflection of some hard work over the years of just getting enough screen time in. And, then maybe it is intuition that just reveals it. But again, it turns out to be something that I think is unorthodox. It's not your standard type of entry. Well, that one, this Forex pattern, I don't really have any performance data yet. here I said I just started live trading today, and actually that is not true. It was true when I created the chart. I had planned to start it today, but I'm going to be starting it probably, I don't know if it's going to be next week or the week after, but I ran into some hiccups with, I was using a tick-based chart, and I found some issues with it. But you can follow my progress on this by going to my blog, which you can get through my website. It says trading blog up at the top of one of the menu items, and you can follow it. This used to be my trading contest blog until PFG Best walked away with all my money, or at least 70% of it, because I think I got 30% of it back so far, and I don't expect any more of it. But there were enough people following this blog for the contest that I wanted to still do something, so I came up with this discretionary system, and you can follow my progress every day or every couple days with this blog. I have no idea how it'll turn out. Obviously, I'm hoping I make money and hopefully learn something from it, and hopefully you can learn something from it too. So this might be a good thing to see. I won't be talking too much about the specific entries, but I'll be talking about a lot of other things. So it might be kind of interesting for you to follow along and see what I'm doing, especially discretionary trading, because historically I've been pretty bad at that. And so now to do that, I'm trying to make it as rule-based as possible, but still there's going to be some discretion in it, and it's going to make it a little tough. Okay, so now I'll go on to some other examples. These ones I do not currently trade with my own money. So these systems are in incubation, and for those of you who don't know some of my terminology, incubation is after you create a system and you button it up and you think everything's working, you just kind of set it aside until you're ready to trade it live, which may be 3 months, 6 months. And what you want to do during that period of time is maybe just look at the strategy once a month or so and see how it's doing with what I'm calling live data. If you've developed the system the right way, the results should be fairly representative of real money, but the point is you're going to see the performance on data that wasn't around when you developed your system. So a lot of the pitfalls people fall into, like hindsight bias and curve fitting to recent data, you can't do that if you put it in incubation, because incubation will uncover all those things. And so I wish I had done this my whole career, because I would have saved a ton of money. Because probably a lot of you are like me, where you see a trading system, you develop it, and then you immediately want to start trading it because it looks so good. And incubation is kind of a stop sign that says, whoa, slow down, just put it aside and come back a little bit later and see how it works. It's a great way to do it. So anyways, here's a couple systems I have in incubation. So the first one, this is the one actually I'm going to have a special offer on, that I've created a whole package for everybody. It's called the Congress Mini S&P system. And really what it is there's been studies over the years that show when Congress is in session, stocks go down. And I guess the theory is that Congress creates a lot of indecision as far as what kind of laws they're going to pass, and that spooks the stock market. So therefore, when Congress isn't in session, they go up, stocks go up. So that's the general idea. Well, of course, I'd heard about this, and so I tested it, kind of modified it, and what I ended up with is something that's based on this idea, but it is definitely not exactly it. So it's not as simple as saying, hey, if Congress is in tomorrow, you buy or sell, anything like that, but it's close. And the other unorthodox thing about it is you have to go and update it daily. You have to find out if Congress is going to be in session on a particular day, and you have to put that in the strategy every day. And frankly, that will turn off a lot of people, because they want if you look at like Forex robots out there, people want something they can set and forget. I always look at it as, well, you set and forget it until you lose all your money, and then when you get a margin call, then you'll remember that you're trading this. So it's, this one's for people who are really serious about trading, and it takes a little bit of work. It takes a minute or two in the morning to update things, but I think the results are well worth it. And here's what the hypothetical performance of this particular system looks like. This is done with walk-forward testing, and for those of you who've followed me for a while, you know how I develop systems, and for example, how well the Trender and SFE systems have been working since I released them. So this is the same type of system. You can see its most recent trade, it just hit a new equity high. It's a little over $90,000 per contract over 400 trades or so, and that's over, I think the first trade was actually 2002. It shows here going back to 97, but 1997 to 2002 there weren't any trades because of the walk-forward analysis, but the way Tradestation works, it still puts that as the first date. So anyways, it's had some really good hypothetical performance, and again, it's a unique idea, and it's kind of unorthodox. It's something most people wouldn't even think about doing. And again, I'll be talking about that and this whole system and how you can get it in a little bit. Another one, I had a lot of success in developing the SFE system, and I'm certainly happy with the way it's trading. Just the past few days in crude oil, which I mentioned earlier, have been really kind of nice. I've really enjoyed that in my own personal trading account. But so I started to think about creating a follow-on, which I'm just calling SFE2 for right now. And right now it's been incubating for a few months. I don't offer this for sale, but maybe one day it will, who knows. But I'll show you two of the systems. I'm trading different markets in the SFE system. I'm trading coffee for one and Japanese yen for another. And coffee, for example, uses a momentum type indicator, but it also uses what I call an anti-momentum, where basically the momentum's got to be so good, but it can't be too good to enter. That's a little bit unorthodox. And the Japanese yen uses a chart pattern that I've never seen in any kind of candlestick book or any kind of chart book or anything. It's something pretty unique, but it seems to work. And some of this was just done through simple market observation, again, just looking at charts. And then part of the one idea I got actually from an internet site, just looking at a trading site, and I saw something and kind of went from there and ended up with what I developed. So here's the walk-forward results for the Japanese yen, and you can see over a few hundred, 350 trades, it's up about $70,000, $65,000, and this is after commissions and slippage. Here's one for coffee, and it bounces around a little bit, but it doesn't take as many trades, but over time it does pretty well. And again, these are systems developed with what I would consider unorthodox entries. And of course the systems have exits and stops and all that good stuff built in, but and I'm sure that accounts for a lot of the performance, but the entries also contribute, because if they didn't, you would just use a random entry and just manage the trade. You wouldn't have to spend any time coming up with entries if random entries worked. And there's probably cases where they can work, but I always look at doing something unique with entries, and when I can, I don't always do that. So I do have some pretty traditional type entry systems that work fairly well. But this kind of helps give you an edge of doing something different. So what can you do with your trading? The way I would look at it is always think about how you can make something unique, something unorthodox, do something different. And part of that, though, is you have to keep your mind open to any kind of bizarre trading ideas from any source, from any field of study out there. Maybe you'll see something from chemistry or biology or physics or just human behavior. The problem you'll get into is if you start to prejudge your ideas, if you start to think that, wow, this is really a dumb idea, this is just silly. If you think that beforehand, it's just going to stifle your creativity. So, just let the trading test. If you test your systems, let that tell you that the idea is no good. Don't prejudge it, because that will kind of kill your creativity by, before you even start, you give up. And many times, whatever you think is the common sense thing, the logical thing, that's what doesn't work. And part of that's probably because everyone else is thinking the same thing, and yet when they all join together, a lot of times the market does the exact opposite. I have a good friend trader, and he's won the World Cup a couple times, and he's done a lot better at it than I have. And one of his big things is looking at magazine covers. And if he starts to see magazine covers say, wow, stock market doing great, blah, 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 he'll start to think about shorting. So again, it's the man on the street thinks one thing, yet he's thinking something unorthodox, which is the exact opposite of conventional thought. So again, those are some of the steps you can take for your own trading. Don't underestimate the power of these unorthodox entries, and